Hello, everyone. I'm here today with Vic Maculitis, the managing partner of I3 Strategies. And today our discussion is focused on the anti-money laundering and CFT national priority of corruption. Vic advises firms on how to build and set up AML programs that focus on detecting and reporting corruption. But also Vic has some interesting experience from some prior roles as an AML officer investigating corruption. So we'll talk a little bit about those examples. I might share some examples that I've been involved in as well. So what I'd like to do is just set up or sort of frame our discussion, Vic, with talking about what I see as this sort of arc of the story of corruption since, AML, we'll say, began around 2020 or 2002 rather. In those early years of AML, most efforts were focused on obviously countering financing of terrorism, in response to the Patriot Act. And then, it evolved over time, terrorism, narcotics trafficking. And then, my view is just over the last decade or so, there's been a lot more emphasis, or we have more emphasis on corruption. And when preparing for our discussion today, one thing that popped into my mind was, well, I know the UK Anti-Bribery Act was passed in 2010. And curiously, I did some research on when was the Foreign Corrupt Practices Act passed, because in my mind, I thought it was going to be more recent, but actually it was passed in 1977. So I don't know how many people listening to this realize that, but some things did happen, at least in the United States as well as Europe over the last decade, where there's just been an increased levels of interest in enforcement. So while in the US, at least, that law has been around for quite a while, internationally more recently, but it just, there seems to be just this proliferation of corruption matters. And we'll get into that in a little bit. I think when a lot of people think about corruption, they think about things that happen in underdeveloped countries in other parts of the world. Whether you're in the US, Western Europe, or Asia, you always think, oh, that's happening elsewhere. But what a lot of people don't focus on, and admittedly, this is more of a US perspective, is that corruption is very much a domestic issue as well. And FinCEN makes note of that in their national priorities. So I'd like to just, get your thoughts generally in response to some things I said there about this arc of corruption. And then maybe if you could actually highlight for the people viewing this, what domestic corruption in the US looks like. And I know you've got some good stories from that.
Yeah, sure. So let me just echo a couple different things. Clearly in the national priority, it's articulated corruption represents both foreign and domestic. However, I think from a historical perspective, as you mentioned, we look at, of course, laws that most are familiar with, FCPA and UK Bribery Act, as sort of outward looking versus inward from a domestic or public corruption standpoint. And oddly enough, a lot of familiarity on the foreign front at larger institutions, but as a previous BSA officer, a lot of experience in working with FBI, public corruption squads, DOJ, public integrity units on sort of corruption issues, more so focused from a domestic standpoint and in places that we probably often don't think of. So everything from the alderman level of a city councilman to just government officials versus what I think everybody in industry kind of gravitates towards, a senior foreign political figure or a prominent even domestic figure at the mayor level, governor level, whatever it may be. A lot of to jump right into some of the case experience, right, in working with the Bureau and these PC squads had to do with government employees that were either being bribed or on the take or involved in various types of schemes in their official role or capacity as a federal government employee, or in some instances as a state or city employee, aside from being an elected official. So kind of different perspective there on the type of corruption. At the end of the day, what those cases boil down to in the form of conduct were essentially schemes and violations of particular federal laws or crimes. But what we would see on the bank side and why we would be involved in the process was kind of twofold. This stuff could surface through various types of transaction monitoring in the sense of traditional cash transactions, wire transfers for these types of customers or individuals that were in government roles or even elected roles that not necessarily made sense for them being in those roles. The other aspect of this was this type of conduct and these cases being a result of a legal inquiry or a legal order. So whether it be a national security letter, grand jury subpoena, so on and so forth, right on that front. And that's how I got most of my exposure early on in my career, actually, in my 20s, with working these types of matters. Now, once you get into the sort of global sphere of corruption and the exposure that many of the tier 1 and global banks have in the form of actually banking, I guess you could tie this back to your experience at Riggs, right? Banking embassy accounts, banking real senior foreign political figures, even high net worth individuals through either multinational corporations or just whatever jurisdictions that have ties to foreign governments and whatnot, where you start to see corruption at a global scale start to surface within your programs. So yeah, it's an interesting dynamic. In coming back to the priority itself and what you mentioned, I think that we're seeing corruption sort of shift from those sort of paper policy laws in the form of FCPA. Now, I don't want to whittle it down to there's lack of enforcement or real historical criminal cases associated with FCPA or UK Bribery Act, but I think from an industry perspective, we've kind of looked at those as we'll set up a policy paper type of program, run it separately from our AML outward facing type of program. And I think what the national priority will do for industry is put more of a focus on corruption as a conduct, as a typology that really needs to be proactively targeted. And maybe we can get into this a little later in the conversation, but actually targeted proactively, and that's going to get into transaction monitoring, modeling, and all the like. But I'll stop there.
I want to move our conversation to another point I made in the introduction, which is that it just feels like there's more awareness of corruption in our world these days. And I was trying to think about, why is that just me, or why is that? And I did look at, are more cases being prosecuted? And it's difficult to find stats that say that. I think one reason is large international cases are just so complicated to prosecute that some of the big cases, whether it's Siemens or the Brazilian energy company whose name escapes me right now, when you look at the DOJ history, these are 3, 4, 5-year investigations. But one of the things that popped into my mind was that, there seems to be a lot more, I'll use the term citizen journalism, but it's not necessarily citizen journalism. The organization, that publishes the Panama Papers. And I think what's happened there is it's awakened people, because when you look at the Panama Papers, you see names of, I was mentioning earlier, underdeveloped countries. So now you see the names of political officials from fully developed countries, all over, G7 type countries. And I think when that started to get published, there was just this level of awareness that went up that said, wait a minute, corruption goes far beyond the Hollywood version of the corrupt, third world dictator, and there's still plenty of that.
Yeah.
But I'm just wondering, how do you think that's influenced, the AML industry, and where do you see any changes coming in the future based on this level of greater awareness?
Yeah, so obviously things like Panama Papers and other what's the consortium, the investigative consortium on journalism, IC, whatever J,
Yeah,
the acronym is, those types of organizations that are out there unearthing or unrooting some of the obvious corruption and bringing it to light and putting in more of a focus, I think forces the hand of industry to sort of take that in, consume it, do the standard things of running names against internal customer databases, conducting internal investigations, see if SARs are worthy of being filed sort of after the fact of the conduct, but nonetheless fulfilling that regulatory obligation, right? But the overall perception, I think other organizations like Transparency International and other sort of watch groups that are bringing this to light, I think again is forcing industry to look at this in a different way than it has historically. And obviously, as we're talking about today, it's a national priority. This administration in particular from the get-go has come out with a number of publications, documents specific to corruption as a priority within the national security strategy, all that kind of stuff. So very, very strong framework around this needing to be incorporated into a program. But maybe going backwards here a bit to the historical perception. When you think about corruption, even outside of the third world dictator type of scenarios, it's multinational corporations or all of our favorite politicians here in the US that have conducted themselves in a manner as it relates to various types of, whether it's pay to play or look the other way, or some type of scheme that, like many other white collar crimes, is viewed as, well, it's not really hurting anyone. I think that is the historical misperception. And we know concretely that that's not the case today or even historically, as I alluded to earlier. These levels of corruption, whether at the lowest levels of public government officials, elected officials at the highest ranks, it has its tentacles in both the global society and the societies around them locally. So I think it's in our face now.
And I think one of the reasons, as you mentioned or alluded to, it's in our face, is that they're among many of the people who do corruption. There may not be the level of self-awareness that it's actually fully corrupt. It may be right here in the United States as well. And I think this is probably more of an eye-opener for people than, it's an unexpected eye-opener, which is, wow, we in this country have an entire class of people who think this is just, quote, the way you do business.
Yeah.
Influence peddling and things. So Vic, I'd like to finish up our discussion. You mentioned, PEPs earlier, but what are some of the tools or some of the investigative or KYC steps that banks can undertake? And what I'm thinking here, let me sort of let you know what I'm thinking about. Country risk rating, adverse media, politically exposed persons, the data, how all that's used. What are just, what you see as some best practices?
Yeah, so outward looking, obviously you're leveraging data along the lines of PEP lists, right? Senior foreign political figures. You're leveraging open source tools like the Corruption Perception Index, Transparency International, that sort of stuff that's informing your risk assessment process or models. That's outward looking stuff. I think there's obviously been a lot of discussion within industry about the domestic PEP or whatever that means, which is good conversation. But as I illustrated too, a lot of the real life cases or matters I've been involved with are going to involve non-elected officials. And I think that's something that's overlooked. So the government official in whatever capacity, and some of these that I've been involved with involve law enforcement officers, and the sensitivity of those types of a federal agent involved in bribery schemes and whatnot are highly sensitive. But when you're banking those types of individuals, there should be obvious anomalies and red flags. Their salaries, as an example, is a matter of public record. So it shouldn't be too hard to figure out the economic purpose of transactions and the expected levels of activity, things of that nature. So leverage some of the, I guess the moral of the story, leverage some of the obvious tools, leverage some of the obvious analytic techniques. And yeah, again, if I go back to transaction monitoring, there has to be integration from, if you have a sophisticated FCPA program, you're a domestic financial institution, you have a standalone FCPA program, or an anti-corruption bribery type of program that might be tethered to your sanctions piece because that's how you view it outward. That has to have connectivity, integration back to your transaction monitoring strategy, the overall AML financial crime program, in the sense that you're looking for conduct. That's the name of the game. Conduct that's going to surface in your monitoring environment that you can thoroughly investigate, hopefully report in the sense of a suspicious activity report, and coordinate with appropriate law enforcement authorities on that. So those are some of the tools, the techniques, and I would say key takeaways from you're running a program, you're in a program at a financial institution, you're looking at this particular national priority. Those are the things that are going to be top of mind. You should be integrated into the program in response to this.
Yeah. Okay, well, that was a great discussion with Vic on corruption. And now let's transition to have a discussion with the Risk Canvas executive team, Ryan Skousen, Joe Gillespie, and Quentin Hout, where we're going to hear some great perspectives from their points of view on the issue of international and domestic corruption. And just to preview a little bit about what we want to talk about, we're going to talk about politically exposed people, the role that they still play, difficulty in beneficial ownership interests, and then we'll talk a little bit about the multiple contributing factors that organizations should look at when trying to risk rate accounts or customers for possible corruption. And we're also going to touch a little bit on the fact that corruption, at least from the United States perspective, is often thought of as happening somewhere else in the world, but in fact, a lot of corruption happens right here in the US. So we'll touch a little bit on that as well. So why don't we start with just discussing, like I mentioned, historically, people think of corruption, they think of politicians, political events. And of course, with all that's going on in the world over the last year or so, I think attention has been heightened around international corruption, and particularly elected officials or those close to elected officials. So Quinn, what has been some of your experiences dealing with the PEP issues, financial institutions and other organizations screening for PEPs? And just are there any sort of advances in that area that you would be interested in sharing?
Yeah, I mean, I do think this issue of corruption has gotten a lot of attention, obviously, with it being captured as one of the top priorities. A lot of institutions have kind of gone back to the drawing board and saying, hey, how are we controlling for that, or how are we monitoring for that? And especially with the Russia-Ukrainian conflict, and the sanctions and the targeting of Russian oligarchs, I think a lot of folks have kind of brought that into the corruption conversation as well, and said, how do we identify customers that we may have intersection with these oligarchs or any politically exposed persons. I think the conversation does usually start with PEPs. It usually starts with, are we effectively detecting PEPs and matching against PEPs, and most institutions at this point for decades have been running software that does matching against their customer list with established politically exposed persons list. And so some folks are kind of rethinking some of that software and their matching approach on both sides of the spectrum. Both, are we missing things? Are we missing potential matches? And other institutions that are saying, hey, maybe we're having too many false positive matches, and how do we become more precise? So that's something that we have seen customers kind of go back to the drawing board on with their screening kind of matching logic. I think probably the harder problem to solve that we've been working with our customers on is understanding the ultimate beneficial ownership of their legal entity customers, and because that's much harder to get to sometimes, and that's the veil of secrecy that has to be penetrated to kind of get even to a name of someone that could be screened, and so that problem has been where we probably spend a lot more money and a lot more time working through with our customers.
Okay. Ryan, what do you, as Quinn's alluded to, you've got the various levels of perhaps, well, some people want to keep it secret, maybe others just complexity. And when you think about all the different characteristics that organizations should be looking at to determine risk, or they call it risk rating or risk weighting.
Yeah.
We won't necessarily debate that term. But what are you seeing in that area, particularly just with the advance in technology? There's so much more data available now, which is both good and bad. Why don't you share a little bit about what you're seeing on that front?
Yeah, I mean, even just touching back on screening specifically, there's a lot of risk indicators and things like that, like you're alluding to. And I'd love to talk to that. Even as we talk about the matching and what leads into the matching, what we're seeing a lot is exactly what you're saying. That volume of data is tough to manage. It's really tough. What we hear a lot and see a lot from customers is it's really tough to get my whole customer base checking against what is now very dynamic. It's not like you get a new, update to your list that's meaningful once every quarter. That's not the case. You're getting daily updates that are meaningful, are material, with changes to who those PEPs are, and then being able to go back to your customer base and really in real time or on a regular enough basis to be reactive to that, get your data screened against it, is just a data management challenge too. So that's another aspect that's really, like you pointed out, the volume that goes into it, and therefore volume that's coming out gets really tough to manage. So that's a piece that we spend a lot of time on. We spend a lot of time on how do you efficiently not just screen your customers in an efficient way, cost-effective way. That's a huge problem, and we're tackling that. But also in that, how do you adapt? How do you adjust? How do you see as those false positives are coming out and be able to, in an agile way, right, in a very quick to react way, tweak what you're looking for, tweak your thresholds, tweak how you're matching. So accuracy, we've seen, has a lot more to do with not finding that perfect algorithm that works every time and forever. There's a lot more to do with being able to rerun your data, do it efficiently, react to that, adapt, and whatnot, and then pull out those indicators. And that's where I think you're kind of alluding to. You have so much data, but oftentimes we're just not exploiting it. And what you need to look for, like Quinn said, you're looking past those shell companies. You're looking through those layers of abstraction that people are putting in there to get away and to not be detected. You have to look through that, but then screen those people and figure it out, get their data, understand those relationships, really address and understand and measure the risk associated with those types of relationships. So that's where we spend a lot of time on risk DNA. And again, the theme that you'll probably hear through this whole series, and I'll harp on, is the ability to react. So being able to tailor your risk profile to what those things are that you're seeing, capture that data that you're able to, that's coming in, that we're collecting and or seeing through external enrichment, and quantify the risk associated with those, relationships, your ownerships, the way we interact with people, social media, the way we are connected to others. It's not just transaction based, it's so many other facets. How do you capture that? How do you measure that in risk, attributes and risk indicators? And then how do you then decision off of that? So we spend a lot of time there. Absolutely. So those are the big things, as Quinn spoke, that just popped out.
Joe, listening to what Ryan said, it raises a question for me, sort of listening to what Ryan and Quinn are saying is just both this real-time sort of operational component. We have data, we have screening, we have things we have to resolve. But then Ryan was also alluding to, how do you just know what your risk is? So I'm wondering what your thoughts are. A lot of risk assessments, we think we all understand what those are, but I'm wondering about, you can perform a risk assessment, but in the stage of assessing risk and figuring out how to mitigate it, how should organizations be thinking, okay, what data do I need now? If we have this risk, if we have an international risk, well, great, we have it and we mitigate it. We have policies, procedures, and people. But wait a minute, we need to do an assessment of the type of data that we should be, either find within our own data set, or should we go outside and get data? Just curious what your thoughts are on connecting data to risk.
Yeah, absolutely. It's a really complex problem, and data really is the answer, as is the case with most things, right? In some ways, I would frame it and say, that the sanctions issue is so much cleaner, right? When there's a sanctioned entity, you're trying to determine, is this entity the sanctioned entity, yes or no? If yes, don't do business, right? Stop the transaction if it's a counterparty. Don't bank them if it's a, if you're a bank and they're a sanctioned entity. When we're talking about corruption and the obligation to kind of assess your risk exposure to this corruption, it's so much more nuanced, right? So there's the problem of identifying: is this does this person have some level of political power, whether directly or indirectly? Are they, first degree, political, authority in some case, or are they, related, familiar, family wise or otherwise? And so there's a dimension of data to that, right? And I think that there are fairly well documented and published. It's a finite set of, like, here are people who are in political power, and how far down do you want to go? And that's where it's sort of the risk-based nature of your institution is going to come into play. What geographies are you operating in? Okay, how far down do you want to collect? Do you want to go all the way down to local governments, et cetera? But what you're looking at is, what type of, in addition to, collecting and trying to identify just who are people that I would consider to be politically exposed, or, having some level of power and authority that could lead to corruption, then it's, you need to juxtapose that. And as you're trying to assess the level of risk posed to your institution, what products and services are they using? How are they using them? Are they using them the way that I expect in terms of volume and the nature of transactions that I'm seeing flow through? And so it's like anything, right? Or like many other threats that you'd be assessing. Geographies come into play. Who are they transacting with? Where are they transacting? Is it expected? And then you got to take into account, when it comes to corruption, again, because it's about power and their ability to wield power, and then to use that to move around ill-gotten gains, or to generate ill-gotten gains. Then you're looking at, well, what are their responsibilities? What access to power do they have? Are they a government official? Okay, what are their official responsibilities? What kind of authority can they yield, and how can they, push and move things? Can they circumvent, compliance type functions? Are they, privy to insider information? You alluded to the United States sort of issue and the way we see that. Do they have access to actual governmental funds? And should you be, on the lookout for money flowing from government type accounts? So you can collect external data to help match. A lot of this is internal data, and it's the way you look at, their behavior and the way that they're acting. And so being able to analyze that and having a structured approach to let you systemically and an ongoing basis reevaluate, once you've identified people who are susceptible to corruption and have have that exposure, that risk exposure, that then is incumbent on your institution to constantly monitor and have these controls that let you evaluate across all these different dimensions. both how they're behaving, but then you need to, are they still in office? Do they still have connectivity to people who are in office, et cetera, et cetera. So it's really complex, and data, at the end of the day, your ability to wield the data that you have internally, combine it with data that you can get access to externally, that's what's going to allow you, again, like so many other things, it's going to allow you to properly assess the risk and demonstrate to regulators and others that you are properly, doing your due diligence on your customers.
Yeah, great point. Joe, just to sort of bring us out of the session, any closing ideas or thoughts? Any specific congressman that you think SARS should be filed on?
No, yeah, I think it's a tough issue, and I think it'll continue to rage on. And I think with the situation that we see in the United States, anyway, politically, I think it's unlikely to get any kind of momentum this year. But I think institutions just need to continue to do the best that they can, working with the data that they have, having a systemic approach in place to assess the risk where there is a risk of corruption, and then to just follow through and execute on what they have, right? So there are ways to improve. You can use, high-powered computing to help calculate risk, but you have to have an approach first. You have to say, this is what we plan to do. This is how we want to look at it. This is what our risk appetite is today, and here's how we project it to be going forward. And I think that's really the key, right? Having a stated policy and then being able to instrument that policy, hydrate it with the correct data, and then follow through on that. Then I think, you can be as safe as you purport to be. And from a regulatory perspective, you can be doing, all that you're obligated to do. And I think that's what institutions should strive for.
All right, great. Well, thanks everybody for the time and your thoughts on this. And my guess is this will be a national priority for many, many years to come. All right, thanks everybody. Okay, so now we're joined by Quinn Hout, who's going to talk a little bit about the risk canvas application in the context of corruption. And just to remind everyone, FinCEN's declared corruption one of the national anti-money laundering, counter financing terrorism priorities. Just some highlights. Obviously, the U.S. government considers corruption very serious. In particular, they're concerned about how corruption undermines democracy and also helps prop up illegitimate or repressive regimes. And interestingly, they call out 3 countries, specifically Nicaragua, South Sudan, and Venezuela. So just with that background in mind, Quinn, looking forward to you sharing with us a little bit about how Risk Canvas can help identify potential corruption, but also how it helps research individuals' background. So why don't we try to frame our discussion in the following way? We'll talk a little bit about how to manage onboarding risk or identify potential risk at onboarding, a little bit around risk rating.
Yeah, that sounds great, Dave. So thanks for the background, and happy to talk through how we do it in Risk Canvas. Other tools kind of have similar types of functionality, but so in the first topic, how do we identify potential corruption that may happen as we start to onboard new customers? I think this is where it all starts, because everything that we're going to do downstream of this, from a monitoring perspective and from a ongoing surveillance perspective, can only be as good as the data that we're collecting initially. And so at the point that we're onboarding customers, it's really important that we identify potential risk factors for corruption. And so a lot of times that's kind of heavily related to how we're identifying politically exposed persons and government officials, and obviously the definition of politically exposed persons, folks that work for the government in positions of power, may have access to government funds, maybe in a position where they may be subject to bribery or blackmail. And then the close family members of those public officials, and the close connections and professional and personal affiliations of that person could all be included as under this PEP umbrella. And so at the point of customer onboarding, when we're bringing on a natural person or a legal entity, it's really important that we're somehow identifying what those potential, PEP connections are. Very few institutions, from what I've seen, actually ask the question to the customer if they're, somehow a politically exposed person. For the most part, the way that that is being identified is through a screening process. And so at the point that we're onboarding a natural person, we are taking their information. We obviously need a good name, first name, last name. We need address, date of birth. We need something about where they're located, where they live, and using those things, we can then screen that individual. And obviously, you need to screen them anyways from a sanctions perspective. So we're also able to screen them from a PEP's perspective. So there are third-party data providers like LexisNexis, WorldCheck, or others who collect and aggregate lists of politically exposed persons. And so it's very similar to what we're doing on the sanctions side. We're screening individuals against these lists. And in this case, for example, you see Eva Cruz has some kind of PEP hit that we're getting from SBS, another data provider that looks at PEP lists. And so screening a natural person is obviously a no-brainer. A lot of times that's part of a automated process as part of customer onboarding. Where it becomes perhaps a bit more complicated oftentimes is when we're onboarding legal entities, and not only more complicated, but more important, because typically when there's corruption happening, or both foreign or domestic corruption, the public official is several degrees disconnected from the account itself, or to try to disguise their connection. And oftentimes that's through a legal entity or corporate shell company, for example. And so at the point of onboarding, it's also really important that this is where ultimate beneficial ownership comes into play. It's very important that you understand the ownership structure of a legal entity that you're onboarding, so you understand the parent and subsidiary relationships of the entity that you're onboarding, but probably more importantly, that you understand who are all the controlling parties of that legal entity. And so it's important that you get to kind of that natural person's level, so that we have names, and then we can use those names, very similar to what we talked about on the natural person side, to screen against PEP list providers. So again, this is critical when you get to the next step of monitoring and doing ongoing surveillance, that we have some names, and we are able to screen those names against PEP lists and understand who are the people that are behind the corporate structure. So once we've done that, and let's say that we've identified, in this case, Eva Cruz, and we've identified that there's some PEPs, a status associated to Eva. Is that enough to make them a high-risk customer? In some cases, perhaps, depending on kind of what type of a PEP hit that is. But oftentimes it's a little bit more nuanced than that. So you want to look at other potential risk markers, and it's the combination of risk markers that are going to drive this person as a high risk customer. And it is very important that you kind of do the risk rating as part of onboarding, but then on an ongoing basis. And the way that we do look at it in Risk Canvas is through something that we call risk DNA. And that means we look at all the things that we know about a customer, and it's the combination of all of those things that drive the risk rating. So somebody could be a PEP. The example that Dave, you and I talked about earlier, that maybe they're the son of a Belgium official, and they're going to school in Georgetown, right? That makes them a PEP. Does that make them a high risk customer? Probably not, unless there's something else that we identify about that person. So in this case, with Eva, we know that she's a PEP. But we also know that, what else do we know? Well, we know that she's connected to this guy named Bill Cruz, who is a high-risk person. We know that the type of business that she's in is an imports company. So it's that combination of things that is making Eva a higher risk individual. So usually it's a combination of, okay, they're a PEP. What country, geographic connections are there? So, are they connected to an AML, haven or a money laundering haven, or are they connected to a high risk jurisdiction in some sort? Or is there something about the nature of their business, their occupation, the type of legal entity that is a higher risk? So, for example, are they somehow tied to arms dealing, or are they a defense contractor? Are they any kind of government contractor? Those types of things would certainly make it easier for them to be subject to corruption. Banking, financial institutions, attorneys, large large construction companies, large infrastructure projects, and then especially like a lot of times occupations and types or business names are very vague, like Imports Unlimited in this situation. Let's say we look at that and they don't even have a website, right? So that in combination with their PEP status, that's what we're looking at that would ultimately make this person a high risk or a medium risk customer. Anything I missed there, Dave?
No, I think you got it. Obviously her relationship to Bill is contributes significantly to the risk. Is there more about Bill? We see he's high risk. What is it in particular about Bill?
I mean, we can look at Bill here. We're going to look at Bill here in a minute. To spoil the surprise, Bill is a government official in Venezuela. So that's kind of that connection. So she's a degree removed from that, but it's an important connection.
Okay.
So hopefully, we've given a pretty good view of kind of the whole value chain, right? Starting off with onboarding the customer, how we initially tagged Eva as a politically exposed person and identified her connection with Bill kind of at that onboarding. We couldn't have done any of this other stuff if we hadn't kind of identified it back at onboarding. We've seen how we've classified risk, through our risk rating. We talked about detecting through our various typologies. And then we talked about how we would identify it as we go throughout the investigations and finally file the SAR.
Yeah. And just to close out, I think what this really highlights is that, corruption is one of those investigations that we focus on who is involved and what is involved. Some suspicious activity, it's just what's involved, if it's structuring or it's high risk wires. But this was a great example of showing how you investigate the people or the entities involved. So thanks for your time today, Quinn. And that was great. Thank you.
Yeah, thanks, Dave.
Well, I want to thank everyone for listening to a very insightful discussion on domestic and international corruption. We certainly hope that you learned a lot and that it provoked a lot of new ideas and thoughts for you. And we welcome you to stay tuned to our next episode in this series, in which we're going to be discussing human trafficking. Thank you.